Welcome to All Things Financial with Jack Driscoll. Each week, Jack takes on all things you thought were hard to understand about your finances and makes it fun, easy, but most of all interesting. From insurance to the best way to save your money and squeeze the most out of the dollars you put aside for your rainy day. And now, you have a friend in the money business. Here's your host, Jack Driscoll.
Welcome back, everyone, to another edition of All Things Financial. As you know, I cover on the show many different areas in finance, and everything that I run across, normally week to week, with clients I like to bring out on the show and share with you, and sometimes I have special guests. Today, I'm very pleased. We have Greg Felton here from NSS Life. Greg, I appreciate your coming on the show.
Thank you, Jack. Glad to be here.
And one of the main reasons Greg had actually offered to be able to come on this show is, Greg, you were explaining to me when I was in your office last week, this is a special month.
It sure is. Well, September is
Right.
a special month, Life Insurance Awareness Month. Yes.
Can you explain a little bit about that, or what we like to accomplish with Life Insurance Awareness Month?
Absolutely. One of the reasons it started is the insurance industry wanted to put the spotlight on life insurance. It's such a needed product, a needed benefit, and most people have it, but believe it or not, probably 40% of the population does not have life insurance. And so they were trying to just explain it in nice, simple, easy to understand terms so people could get a little more familiar with life insurance.
Okay. Now, Greg is with a company, NSS Life. Tell us a little bit about NSS Life, where you are, what you're all about.
NSS Life is a fraternal insurance organization. We've been in business since 1890, so that's 126 years
Wow.
young. Been around a long time. Originally, the organization was started by immigrants of Slovakia.
Okay.
Today, membership is open to anyone. And we've done quite a job. We're coming up on $1 billion in assets, more than 30,000 members. So We're very proud of where we are today, and hope to keep it growing.
Now, is this nationwide? Are you in all the states? or
We are
just
not
some
in
states?
all states. We're in 18 states.
Okay.
Primarily north, west, and south. So
Okay.
maybe the middle of the country, parts like out Midwestern states would be out.
Okay. And then where's your home office?
The home office is right here in very close by McMurray, PA.
Is that right? Where?
Yes.
What street or?
Oh, 351 Valley Brook Road, McMurray, PA.
Valley Brook, right?
Valley Brook
okay,
Road.
I know where that is.
So-
That's right. Okay. Can you explain when you said fraternal, what that is?
Yes, I mean, there's basically three different types of life insurance companies. There are stock companies, mutual companies, fraternal companies. Stock companies would be something like AIG. They've got a lot of notoriety of late in the press, but it's owned by the stockholders. The company is trying to make a profit for the stockholders. It's still a fine company. It's just the way it's organized. Mm-hmm. A mutual company would be Metropolitan or New York Life. These companies are, in a sense, owned by the policyholders. And so they may pay dividends to their policyholders. A fraternal is kind of a hybrid of a mutual company. In other words, the fraternal insurance organization is owned by the members, and they have a assembly, lodge, chapter organization type that gets together and elects officers, and those officers go to conventions and come up with the bylaws for the organization.
Is
and
that
we
in
also,
each different area?
Yes.
Ah,
Yes. And we also pay dividends on our policies.
okay. So they're just different formations of being able to do and provide life insurance.
Correct.
What types of policies does NSS have?
NSS actually specializes in the annuity market. We do IRAs, Roth IRAs, Coverdale, education savings accounts, but we also do life insurance. We offer a variety of life insurance plans, permanent, term, and a couple different
Okay.
options in each.
Yeah, okay, that's good.
So,
Well, what do you think people ought to be aware of now that it's Life Insurance Awareness Month that you would like to share?
I think the most important thing people should realize with life insurance is most people are afraid of it because it's something that we don't deal with every day. It'd be great if it was taught in schools like some other things. I mean, I always like to use the analogy that, I had to take metal shop in school. Well, that was not a good experience, and I was not suited for that. Perhaps a simple class on finance, like learning about balancing your checkbook and some life insurance basics. Yeah. So I think the most important thing to realize with life insurance is it's really not that expensive. There's some inexpensive ways to provide coverage for your family. Mm-hmm. I brought along a little brochure. It talks about, this is actually from the Life Foundation, but this talks about what you need to know about life insurance. And it's about 8 pages, and if you can get this from the lifehappens.org website. You can download this brochure for those watching. You can contact me or Jack, and we'll get you a PDF of this, or we can even send you one. But inside this little brochure, it talks a little bit about chances are that you need insurance. Sometimes people think, I'm single, I don't need insurance. That's not entirely true. You're single. Yes, you may live at home, but you have a car, you may have student loans, and funerals still cost money. You should have those 3 things covered at least as a young person. Then you get married. Now you have more responsibility. You buy a house. You have a child. All these things add to your financial responsibility, and that's what life insurance does. Life insurance is just money that's going to be paid to one of your loved ones someday. Mm-hmm. And it's called life insurance because it's for those that are still here, still living life.
Yeah.
Obviously it's not going to matter to you. You have passed away, but now we pay the claim. And then it talks a little bit about the insuring the times of your life. There's how much insurance do you need, a life insurance worksheet. So this is a great little brochure.
That's a nice brochure.
It's actually one of the best brochures I've ever seen. It talks about what kind of insurance should you buy, where to buy it, and from whom.
How do people get that from you? Can you share your email and also your phone number? If
Absolutely. They could email me at gfelton@nsslife.org, or they could call me at 724-731-0094. Be happy to mail them that or send it to them in an email. And again, I'll make sure you have that also. So
yeah, that's a nice brochure with a worksheet. That's very nice.
Absolutely.
I appreciate you sharing that.
Glad to do it. And that's all part of the Life Insurance Awareness Month. And that's coming up in September. There's a lot of different promotions. You may hear of some more television advertising from some of the Main Street companies. They're going to touch on that. Some of the bigger ones like Metropolitan, State Farm, Geico, they may all touch on stuff like this.
Okay. And to your point, when you bring up the students or someone that is not married and still single, thinking they might not need life insurance or need it yet, I guess there are 2 issues that one of them that you brought up, which I hadn't thought about, which was the student loan obligation, the next possible financial crisis or bubble, as we see it referred to in the news. It's scary, as most of you know. And the other one is life insurance is health underwritten.
Correct.
So when we say, I don't need it yet, I'll wait until I do.
Right. A lot of times when we get calls at our office, people have just came out of the hospital and they've thought, gee, maybe I should get life insurance now. I've had a health scare. Mm-hmm. That is not necessarily the best time to think about life insurance. You want to get life insurance when you're young. Now, I'm not saying you can't get it, because there's ways to still get it regardless of your health. But the younger you are and the healthier you are, the better your options are.
And the less expensive. It's cheaper.
Correct.
Yeah.
Correct.
Yeah. Okay. Now, with Life Insurance Awareness Month, there's a practice that you and I do separately, but most professionals in the life insurance industry are aware that we want to analyze a person's current situation first before making any recommendations in any direction. So can you explain a little bit about how that process works?
Absolutely. We call it a policy audit, and what we'd like to do is sit down with people to review where you're at. In other words, we would help you fill out, if you would like, we would help you fill out this one page that's in here, the Life Insurance Needs Worksheet. And this gives a person an idea of how much insurance they need, but it also takes into account what you currently have. It may also look at your insurance benefits at work, including your 401k. And then You want to dovetail all those things together to make sure you're adequately protected.
And then what does that process look like once you review someone's situation or you collect the information? Then do you do any analysis on the policies that are currently in force?
Absolutely. Well, a couple of things we find out. One, I mean, obviously, we want to always make sure that the beneficiaries are correct. That's very important. We also want to look at each policy in the policy audit, because sometimes we find, especially with a type of insurance called universal life, this was a product that came out in the 80s when interest rates were very high. It's a great product. It has a lot of potential. But the one thing that it does have is that it's tied to the interest rates. Now, as you know, interest rates are down. They're down to historical lows. They've been down for a while. And that has affected many of these types of policies. The flexibility that is supposed to be in a universal life policy that lets you pay more or less money, take money out, or build up money for retirement or emergencies may not be there because of these low interest rate environment. And one of the ways you can tell how it affects your policy is every year you should be getting a statement from whatever company you purchased that policy from, and that statement will have in there the cost of insurance and how much cash is in your policy. Well, if you see the cost of insurance increasing, which it probably will, but if you see the cash value not increasing or decreasing or barely increasing, those are little clues that something is going to happen with this policy in the next few years as you get older, and you probably should take some corrective action.
So something may be wrong, you're not sure, but that's a first sign that something may be wrong with the policy.
Absolutely.
Or may be developing.
Absolutely.
We've seen that too. Now, if you are doing this analysis, what do you do?
Well, the first thing you can do with that policy is you can ask the company that issued the policy to give you an in-force illustration. And what they'll do is they'll take your position, wherever it is right now, based on the premiums you're supposed to be paying and the interest rates, and they'll project it forward. And that's very important, because when you get that in the mail, you might find out that that policy is going to expire in the next 5 years or 10 years. Or maybe it's not going to run to age 95 or 100 as it was supposed to originally. Maybe it's going to expire at age 78.
Do you do that for people? If they come into NSS Life, they meet with you, you see their policies, do you help them do the paperwork necessary to send and submit to their companies for that audit?
Yes.
And it's called an in-force policy illustration?
Yes, and it's actually just like an authorization form. The person would sign that, and we send it to the company, and the company will send the information to the client.
Okay. So you'll help them with that process once you review everything that
Absolutely.
they have.
Be glad to do that.
Okay, now you also brought, now if the report comes through, or when the report comes through, I should say if the report comes through, right?
Well, I'm hoping most companies will send that.
Because sometimes you might have to second or third request that report, so you don't want to forget about it just when you send it in.
Okay.
You want to think about that a month later, hey, I haven't heard again, maybe we better check on that, right?
Absolutely.
But when you get that report in, now what are you looking for? Is it where you mentioned an annual statement, what's different about the in-force policy illustration? It gives you more information.
Your annual statement is always going to be more of a snapshot of where you're at right now. So it will have on there the premiums you've paid, cost of the policy, how much cash is in it. The in-force illustration is going to take those same factors, but it projects them forward. And it lets you know, okay, this policy based on these premiums might run another 5 years or 10 years or whatever the number is.
Well, they're supposed to run forever.
That's correct.
A universal life is a permanent form of life insurance.
It is. It's a hybrid form, though, and I use that word carefully because a true permanent plan of insurance would be like whole life insurance. Whole life, 20-pay life, single premium policies. Those are all true permanent plans based on whatever the premium you're paying. That's what it is in the policy forever.
Okay.
There's no changes. With a universal life, it's more of a flexible type product in that the premiums can change. We didn't think they were going to change because we based it on what interest rates were. Now interest rates are different, and so we do find many people who have those policies have problems.
So if you get a policy, in-force policy illustration back, are you saying that the person that bought that, who was buying it for permanent insurance, not if I die, but when I die. Where term insurance is, if I die within 30 years or 20 years or whatever, then I want coverage and it runs out. But they bought permanent insurance and paid more for that. Are you telling me that when you get life insurance in-force illustrations in, it might say 5 years to go and then you're done?
Yes. See it all the time.
Are people surprised or did they expect that?
I'd say most people are surprised. They're not aware that that's how universal life works.
Is it too late to correct
Absolutely not.
What do they do?
Well, the number one thing is to see where you're at. You have to know where you stand before you know where you're stepping.
Okay.
So start there. Then the
I
next,
like that.
Then the next thing, well, then the next thing you do is you can make adjustments to that plan.
Okay.
You have some options. You can pay some more money into the plan. Maybe that is the best option. You can reduce the amount of coverage to compensate for the lower interest rate. For instance, if you were insured for $100,000, maybe if you made it $75,000, the policy would run forever. Maybe that's a good alternative. Okay. And then the third alternative is sometimes people want out of that policy now. They're not happy with the way that went, and there's a provision called a 1035 exchange where you exchange that policy for a new whole life policy. The disadvantages to doing that, though, are that the new whole life policy is based on your age now.
Okay.
So the premiums are probably going to be a little more, and you have to be in somewhat reasonably good health.
Okay.
But
so there are some different options on there.
Absolutely.
But when you get that in-force policy illustration, folks, and you thought you had a permanent policy and I'll go ahead and do this, but it's unnecessary, and you get a statement in that shows your policy's running out and will be terminated, self-depleted, I guess, or whatever you want to call it, self-disintegrating in 8 years, and you'll no longer have that life insurance. I think you'd be thankful that you saw the show where Greg's saying, do a financial checkup first on that policy, almost like a medical checkup.
Absolutely.
Yeah, you think everything's okay, and then they find something on the tests, and they found it in time, thank goodness, and saved your life. It's kind of the same concept probably on saving the life insurance policy's life if you find it early enough.
Absolutely. That's a good analogy. Yeah. Medical checkup, and this is a financial checkup.
Yeah.
Yes, because the sooner you find it out, the more options you have available to you. Sometimes people come in to our office, they bring a letter that says, hey, my policy is going to expire in 60 days.
Really?
Well, that one, your options are over. You've run out of money. There's nowhere to go.
Yeah.
So,
have you ever gone to the other company and asked them, okay, what can we do to save this? How much additional can we pay? And they turn back and say, there's nothing we can do. Have you ever run into that? Or
yes.
What?
Yes, very disappointed. I mean, as much as I hate to say it, I'm in the insurance industry. I like to think it's the finest industry. But every now and then you run into companies that when that policy reaches that expiration point,
yeah,
they're almost happy that it reached that point.
Is that right?
And because they're now out of the risk, they've had the money, the client did not die, and so it became a very expensive term policy.
Tough luck, Charlie. So what your solution is to that is find out early, get them properly funded so they can't take the policy away from you, and you do indeed get the benefit you thought you were getting and paying for.
Absolutely.
Yeah, because you can fix your own problem.
Right.
If you find it early enough.
Yes.
A byproduct of some of this analysis you brought up was beneficiaries. What did you mean?
Well, a lot of times whenever we do these policy audits, we like to review the policy, make sure everything is in force and correct, and all the premiums are there. We like to check for riders. Sometimes there's things like, we call it waiver of premium on a policy. We find that people may have been disabled. They had waiver of premium on their policy, which means their premium should have been paid by the insurance company. They weren't aware of that and forgot. So it's a good thing to check the riders. The other thing with the beneficiaries, it's really very important because, believe it or not, sometimes people will have their parents on there, siblings, did not, their first wife, and in some cases their second wife, and now, they've moved on.
Yeah,
so you want to have the right people to get this money because insurance contracts are just that. They're legal contracts and they pass by law. So in other words, if I have the beneficiary if I had my first wife on there, if I was married a couple times, and I had my first wife on the policy, I'm now remarried, and I pass away, I wanted the money to go to my new wife
Yes.
or my current wife.
Yeah.
No, it passes by law to that first
Wow.
wife, and she's under no obligation to give the money to my current wife. So you want to check these things. You want to make sure they're right.
Do you run into that much? Have you seen much of that where somebody, after the time of death of the policyholder, the family is either disgruntled or up in arms because something went wrong with that? Are you seeing that at all?
Yes.
You are?
All the time.
All the time?
It's unbelievable. The other strange thing that happens at the time of a claim is if there were 3 children as beneficiary. The parents wanted these 3 children to be the beneficiary, but there was a 4th child that was estranged from the family.
Okay.
Causes a lot of heartache.
Really?
It's unbelievable.
Yeah.
So there's ways that they should either name them or set it up differently or have some other funding arrangements in place.
What about if there are multiple policies? Do most people, or even outside contracts, company 401ks or benefits, pensions, things like that, are you reviewing those things and helping people coordinate, or what do you do there? What don't you do?
We certainly try to do that also. It's important to review those company plans because those fall under what's called ERISA, a government program, a government mandated section, and they pay whoever the beneficiary is. So a lot of times you'll find a person that maybe, for example, worked in the mill for 30 years. He may have had his mother on as beneficiaries. Now he's been married, his children are grown.
Yeah.
Something happens, his
mother's in a nursing home now.
And she's the beneficiary of the policy.
Which means the nursing home's the beneficiary of the policy.
Absolutely.
Maybe.
Who knows?
Yeah. But not what they intended.
Correct.
So they need updated.
They sure do. And then the other thing, when you're reviewing the company plans, it's a nice thing to also see, a lot of times people think they have adequate life insurance. They go, oh, I have insurance at work. And they don't really think about that big picture because it sounds like, let's just say, for example, a person made $50,000 a year. Their company plan may say, okay, you're insured for twice your earnings. So now they're insured for $100,000. What they don't realize is a couple things. One, if they get laid off or when they retire, those benefits end.
Or disabled.
Or disabled. Thank you. And sometimes when you retire, that benefit that was twice your earnings now becomes just $25,000 to age 70. Then at 70, it reduces further to $10,000 or some number. So there's a lot of reductions in insurance from your group plan. And a good way to think about it is it's provided by your employer. They get to call the shots. It's not in your hands. Okay. When you own personal life insurance, you call the shots. Yeah. That's the big difference.
Okay, I like that.
Well, and it happens all the time. We see, especially in our area, we were a heavy blue-collar area at one time. Mm-hmm. We see a lot of companies that have changed they've closed up, restructured, reorganized, and what they've done is cut out retiree health benefits, retiree life insurance, and it does happen. So.
Yeah, we're seeing that more and more in my practice too. We're seeing more and more clients calling saying, my pension just got frozen, or this benefit got taken away, or reduced, or whatever, or compromised,
Right.
Greg, can you we're going to wrap up the show. We're running out of time. Can you please let the viewers and the listeners know again how to contact you, how to get a copy of that brochure, email and phone number maybe?
Absolutely. The brochure is from the Life Foundation. You can get a copy of this, or you can go to the Life website at lifehappens.org. If you'd like, you can email me or Jack. My email is gfelton@nsslife.org, and the phone number at my office is 724-731-0094.
That's great, Greg. And anyone who has any questions on this or would like a life insurance policy review, or even to talk about annuities, please give Greg a call. He'd be glad to help you out, to help you review your own situation and get you on the right track.
Thank you, Jack.
All right, appreciate it, Greg. Thanks again, everyone, for listening and tuning in to another edition of All Things Financial. We'll be back again next week.
Securities and investment advisory services offered through SagePoint Financial Inc., member FINRA SIPC, and registered investment advisor. Insurance services offered through Driscoll Insurance and Financial Services Inc., which is not affiliated with SagePoint Financial Inc.